Hello everyone, hi, welcome to the channel of Wall Street Mojo. Watch the video till the end, and also if you are new to this channel, then you can subscribe us by clicking the bell icon. Friends, today we're going to learn a concept which is known as deferred expenses. Now, we'll go down and understand definition, sort of, you can say that. The dictionary meaning of the word defer, it's quite clear, is to put off something to a later date or at a later time period, or to basically postpone. With that set of mind frame that we can simply say that deferring an expense means postponing the expense. Okay, this was the dictionary meaning, but we need to see in terms of financial and accounting terms. The dictionary meaning is quite clear, but the activity of postponing over here of the expenses does not mean that expense is not made. It does not mean that. Instead, the postponing is done the reporting of that particular expense. So deferred expense are the ones which are the expenses that are going to be incurred in the future case. So let's have a look at some of the example of the deferred case so that we understand. The first example that I'm going to take is of house rent expense. Now let's assume that there is a student A. Student A is living in a rented house costing him around let's say $10,000 per month. This is per month data. In the month of June, he has an extra cash which is standing at 20,000 INR with him, and hence he decides to pay off the rent in advance for the next 2 months. So in other words, he has already paid off the service occupying the rented house, which he will consume living in the house in the coming months. So for the next 2 months, the expenditure of 20,000 made will serve as the asset to the student as it is providing him with the benefits. So if the student were to record this advanced rent payment transaction of INR 20,000 in his account of books, in his accounting books, he will be labeling as this expense, and the same will appear as an asset on his basically balance sheet entries. A month later from now, the deferred expenses head will reduce from INR 20,000 to 10,000, and this is because out of the 2 months of the advances payment made, 1 month's service has already been availed, and now the asset available on the next month worth will be only 10,000. Hence the reduction in the expense head, and accordingly the entry of 10,000 will be made in the expense head as per the double entry accounting standards. So what are the key learning from the deferred expense example is that we can extend the idea of the expense to financial statement of the companies, as well as the core ideas to remember is that anything for which the company has you can say already paid out and is now entitled to receive services, therefore are recorded as the deferred expenses and not the expenses due to the differences in the timing of consumption of that service. Now, formally, the term deferred expenses is used to describe the payment that is basically made, but it won't be reported as an expense until a future accounting period for the timing as of now. So these expenses are reported on the balance sheet as an asset until it expires. Okay. Let's take one more example of consultancy. Now, a corporation, let's say, is into manufacturing of handbags and shoes. They are planning to install a new manufacturing until and have a hired consultants lawyer for doing due diligence and making legal contracts. Let's assume that the life of this new manufacturing until is going to be 10 years. And the consultation and legal fees amounts to, let's say, 2.5 let's say 25 million or 2.5 crore. So the company will make an entry of the entire payment, or let's say let's 2,50,000. Will make a payment of 2,50,000 at the beginning of the project, that is at the beginning of the year 1. But it will not enter the amount entirely in the expense head. Rather, it will defer Rather, it will basically defer the INR 2,50,000 to balance sheet account and such as new projects cost. So the company will charge 2,50,000 divided by 10. So it will charge 25,000 over 10 years of the new project cost to the expense each year. Now the reasons why the total expense is recorded as the deferred expense, because it provides a better treatment of the matching the total expenses of INR 2,50,000 to each period. And here each period is a year, unlike the above, the deferred expense example, where each period was a month, where they will be using the newly installed production unit and earning revenues from it. So this was the example on the consultancy part. Let's take one more example of insurance. Now the insurance premium is paid in advance. The insurance premium is basically paid in advance in return for any accidental cover coming months or years. So for instance, let's say there's a company A. They pay company A pays the insurance premium for its office building, and the premium payment is half yearly. Okay, so the total cost of the insurance is, let's say, 80,000. Payments over here will be made in the month of June and December. Okay, every year. So in June, the company will pay the INR of 40,000 for the insurance coverage it receives until December. Rather, it has paid in June an amount of 40,000 for the service. Basically, that's insurance protect. So it will consume over the next 6 months until the next due date for the payment approaches. So in deferred expense example, the company will record the deferred expense of 80,000 as the asset in the first year and as an expense in the second year. Now let's understand the deferred expense versus the prepaid expense. So while deferred expense are sometimes also referred to as the prepaid expense, there is a fine line of difference between both of these terms. Remember, this is deferred. I'm writing here as prepaid expense. Strictly speaking, the two terms cannot be used interchangeably. Now, when the time duration of determine is if it is less than a year, that is when the advance payment is made for the future period for falling within a year, the expense is labeled as prepaid expenses. Okay. While when the future payments are made for a period longer than a year, then it is labeled as the deferred expense. So the reason for this lies in the categorization of the assets. Second, we have already learned that the prepayment of the expenses is considered as an asset for the reporting purpose. So when the asset created is less than a year, it is the current asset. We know it very well. When the asset is less than 1 year, it is the current asset and is reported as the prepaid expense. So similarly, when the asset is created is going to last for more than 1 year, it is termed as non-recurring. That is what we call as long-lived asset and is reported as deferred expenses. Right. So that is it for deferred expense. So that's it for this particular topic. If you have learned and enjoyed watching this video, please like and comment on this video and subscribe to our channel for the latest updates. Thank you everyone. Cheers.